Forget to call us viewers on the numbers that are there flashing on your screens right now. You can also reach out to us on WhatsApp. Both the calling and WhatsApp numbers are there on your screens. And on the show today, we are joined by Prashant Tapse, Senior VP Research Analyst, Mehta Equities on the fundamentals, and Aditya Arora, Founder and Multi-Asset Research Analyst, Adlitech.in on the technicals. Welcome to the show, gentlemen.
Very good evening to you.
Good evening.
Good evening. Now, let's get straight to the show. First up, we have Chandan's query. It's a WhatsApp query. So he holds 1,000 shares of Zaggle prepaid at 362 a piece. He's looking for a 1 month, view on the counter. So Aditya, coming straight to you, he bought it at 362. Currently, it's trading at 396 and was also up in trade today over 3%. So what's your outlook on the same?
So the overall view is positive. Currently, it has given a breakout of double bottom formation. Upward, the momentum can hold towards 500 levels. There is a gap down opening which has been seen, but we feel that it will hold above 500 level. Well post, the volumes are really good. So buying interest is there. The RSI scores above 60. It is again showing some good strength. Again, talking about the directional fund is also showing some good signs. So can hold for a momentum towards 500 level with a stop loss of 340.
Understood. And talking about the fundamental, view on the counter, Prashant, the company's outlook is that it's expecting a 63% growth in FY25 and also expecting a 45 to 50% growth beyond that as well. So, considering these expectations, are you positive on the company's fundamental performance, and do you see it, giving results in terms of monetary results to our investors there?
Yes, I think if you see the Q4 earnings, I think they have delivered a very decent and a very strong outlook numbers. When we see the margins again, I think the margins are also grown in this quarter. Overall, the margins have grown by at least 100 basis points if you compare YOY. So I think that would be the one reason why I'm very much bullish on that. And even with respect to the business model, which is into giving services to the SMEs and corporates. So I think it's a very unique business model and a new age business model kind of. So I think that will also arrive with a high valuation. So currently the stock is almost trading at a 60p and a price to book valuation of almost 4x. But even though with the growth expectations for next financial year, with the high growth expectations, I think these valuations are justified. And I'm also very much bullish on the stock for at least 12 months from the current levels with a target of at least 480 and 500 for next 12 months.
Understood. Thanks for that view, Prashant. And, with that, we have a query. So, Giri holds 1,800 shares of BEL at 280 a piece, and he's looking for a long-term view on the counter. So, BEL's role in Operation Sindoor also has been quite significant. So, keeping that in mind, and fundamentally also, it's a strong company. So what suggestion do you have for Giri and for all the investors who have been invested in this counter, Prashant, for long term?
You rightly said that almost the 80% of the business comes from the defense, and many of the defense equipments have been used in the recent war between Indo-Pakistan. So I think that is giving a lot of clarity about the product and the performance. That will bring a lot of business going forward. One, government of India will obviously push a lot of order books to BEL. Plus, again, we may expect a lot of export orders from the world. So the way they have seen how Indian products are performed in the real live war recently, what happened. So in terms of valuation, again, I think with the growth expected going forward, 50p and a price to book value of 14 would be justified. And I think as a long-term investors, at least 400 to 410 can be a target.
Right, and I'm really sorry, viewers, because I introduced my guest incorrectly. I'm sorry, Kunal, because earlier I got the information regarding Aditya, so I'm really sorry there. So, viewers, our guest on the technicals is Kunal Kamble, Senior Research Analyst at Bonanza Portfolio. So, welcome again. And Kunal, talking about BEL for the short term, and for those people who actually wants to invest in this counter at the current level. So what suggestion do you have there? Are these the correct levels to enter as well?
Yes, it has given a breakout. Resistance has been broken out today itself. So it has posed upward towards, we can see upward momentum towards 382 level in a short run. Overall, a good breakout has been seen. Talking about wave as well, it is running in its third wave. So an upside momentum can be expected in the counter if you are entering at current level. So a stop loss of 319 will be appropriate.
Understood. Thanks for that view. With that, we have another WhatsApp query. So Satish holds 10,000 shares of Ratan India Power at 11.2 apiece. So he's looking for a long-term view, but I'd like to take both the technical and fundamental view on the counter. First, starting off with the fundamental outlook. Prashant, what's your view? What's your sense on this counter? Also, do you advise other investors also to hold, this particular stock for a long-term perspective?
With respect to the power as a sector, I am very much bullish. I think India needs a lot of power for next 10 to 15 years. So in that story, I think every power company will add their value into the growth. But again, if you see the market cap of the stock, which is almost like 5,000 crores, and the price, which is trading at 10 rupees, I think there would be some kind of risk, which would be seen as a very but tiny stock with 10 rupees as a value. I have not done any fundamental research on Ratan Power, but if I would like to advise him to have an alternative stock like Tata Power as well as Adani Power can be alternative leaders in the power sector to have a better long-term opportunity.
Absolutely. So move to the leaders in the power space is what Prashant is suggesting. And, I want to make to actually have a look at Ratan India's chart performance as well. So Kunal, if you could help me with that, because it's trading at 10.5 currently. What are the charts suggesting? Any uptick or downtick?
See, currently what we see is it is an early sign to say currently that a reversal will be seen. So it is better to take an exit. No such primary trend is also negative. So no such kind of reversal is seen. So it's better to take an exit from Ratan.
Thanks for that view. With that, we are joined by first caller on the show from Mumbai. Hi, Mahesh. Good evening.
Yes, hi, good evening.
Yeah, how can I help you on the show today, Mahesh?
Yes, I would like a technical and fundamental view on Apar Industries.
Okay.
I don't hold the stock, but the stock has shown a very strong growth till last year, and it's down almost 50%, but it was up almost 7% in trades today. So I want to know short to medium to long term view on this counter.
Understood. So, firstly, starting up with you, Prashant, rightly said that Apar Industries, it's performing, really well. So, are you optimistic on the counter? Also, are these the correct levels, or is it highly, valuated? What's your take on Apar Industries?
On the industry, again, it is indirectly connected to power sector. I think the India's largest aluminium and alloy conductor manufacturer and oil transformer manufacturer. So indirectly, it is producing something to the industry which will be donated to the power sector. With respect to valuation, I think yes, reasonably valued at this point of time with almost 28 P forward and price to book value of 5. I think with this perspective of these valuations, I think this is a very decent valuation. So what would be the price action? I think the technical colleague can answer it better. But for me, as a fundamental, I think as a long-term investor, one should start accumulating the stock on every dip.
Right. And Kunal, talking about the valuations, rightly said, so, currently it's trading at 6,928 and was also up in trade today over 6%, nearly touching 7% there. So, are these the elevated levels, or these are the correct levels to enter for a new investor?
No, these are the elevated level. If we look, there is a strong resistance at 7,890 level. Till the time the stock doesn't cross above 7,819 level, it doesn't seem that the stock is going to move upward. This is a retracement momentum. Again, looking at the momentum front, RSI has entered into the overbought zone. So we might see some correction coming in the early days.
Understood. Thanks for that view. And with that, let's go across to a caller joining us from Vijayawada. Hi, Sai. Good evening.
Good evening, madam.
Yeah. How can I help you on the show today, Sai?
Madam, I have 2,000 shares of Trident at 52, madam.
Yeah.
My question is, can I hold those shares for next 10 years in order to get some multiple returns, or can I book loss now and invest that amount in any small cap mutual fund? Could you suggest, ma'am?
Absolutely. Sai, I'll direct this question to you, Prashant. He bought it at 53, currently trading at 28, and fallen significantly, and he is sitting on a significant loss also there. But he is planning to hold this counter for like 10 years. So is it advisable, for Sai to be invested in this counter for 10 years for so long? Are you optimistic?
10 years would be a too long view taken from the current business model. I think he's already down by almost 40-50% from his buying price. And even the valuations as well as the ratios are not supporting well for an immediate uptick in the stock. But again, if he has that view of 5-10 years, I think he should try to average something at these levels again and try to average his buying price. And then I think exit of near 32 and 40 can be seen at least for 1 or 2 years. That can be one strategy again. And if he is very much comfortable to have a mutual fund kind of approach, I think that would be a great thing one should look at, because any mid cap and small cap for next 10 years can at least be double from the current level. So at least he will recover his cost, and then he will have a diversified portfolio in the scheme which he is investing into mutual fund. So if he is asking me the advice, go with mutual fund. That would be the best opportunity, and he has that kind of additional risk taking capability. Add some more at this point of time, average it out, and then wait for the cost of price and then exit.
Yeah. So Sai, if you have a risk appetite, then go for investments in stocks, and otherwise for a safer bet, you can go for mutual fund investments. And with that, Kunal, talking about Trident's short-term performance there. So what are the key support and resistance levels based on the recent price action?
Okay, so the overall trend is negative. It is making lower low, lower high formation in a monthly time frame as well. So the trend is negative. The secondary trend is also negative. A minor trend have been changing, but the resistance is placed nearby at 29.76. It required 29.76 to go upward. Then only we can see a upward momentum towards 32. But currently at this level, we won't suggest any buy entry. It is better to take an exit because the primary trend is completely negative.
Understood. So it's a negative outlook on the counter. With that, we have a caller joining us from Guntur. Hi, Ramchandra Reddy. How can I help you on the show today?
Good evening, madam.
Good evening. Please go ahead with your query, Ramchandra.
Regarding the Sygil India.
Yeah.
I bought 1,000 shares at the rate of 45 rupees.
Okay.
Can I hold for long term for 1 year? Or can I exit or?
Yeah. Okay. So 1 year outlook on Sygil India. Prashant, directing again this question to you. So with the current price to earnings ratio and approximately of 48.33 and a price to book ratio of around 2.69, so is the stock considered overvalued compared to its peers?
I think it's slightly overvalued, but there are no peers to it because it is serving the US market with respect to the health needs of the US customers. So there is no apple to apple comparison for Sygil India and India right now. They're almost like it's a Bangalore based company, but servicing a lot of the US customers. So for me, the growth is very high in the US healthcare industry. And I think that would be the one reason why these 45, 46 P can be justified, even 2.5 price to book value can be justified. Price action for short term may be under pressure due to any profit booking attempt in the recent rally. But for me, at least a target of 55 and 58 can be seen in next 12 months. So my recommendation would be hold and.
And Kunal, what's your sense on the counter for short term? How is it faring on the charts?
Look, the stocks is making a gap up opening from past 3 days, and it has closed at a very good levels. So the dominance of buyers is really good at current levels. So the sellers need to work very hard. So it is looking good on the chart. We might see upward momentum towards its high of 54 till the time it is holding above 41 levels. So if 41 level is broken down, then we might see the stock going below 38 level as well.
Okay, thanks for that view. With that, we have a caller joining us from Bengaluru. Hi, Sandeep. Good evening.
Hi, ma'am. Thanks for taking the call.
It's our pleasure. Please go ahead.
I'm trying to invest for a short term in a PSU banking sector. So trying to understand, is SBI a best bet or Canada Bank a best bet for a short term, say 3 months?
For 3 months?
Yeah.
Okay. So, Kunal, generally people want to invest in PSU banks like, SBI or Canara Bank for long-term perspective. But, Sandeep is looking to invest in this counter for short-term for a very, for like a brief period of 3 months. So, what's your suggestion to Sandeep?
So looking at SBI first, we'll come forward with SBI. So SBI has given a breakout of inverse head and shoulder pattern. So it is a reversal pattern. So it has given a good breakout. Again, a throwback has been seen into the pattern, and again, a upward momentum is seen. So if you are holding that, you can hold that the stock is ready to move towards 878 levels in coming days till the time it is holding above 750. If you want another stock, I would recommend Union Bank. In PSU, Union Bank is looking really good. An upward momentum can be seen in Union Bank. It has given a breakout of a rounding formation, cup and handle formation. Two breakouts are there. About 135, you can enter with a stop loss of 124, and an upward momentum can be expected to a 160 level. So Union Bank can be a good add in the PSU sector currently.
Understood. So, Kunal is betting on Union Bank for short term, and Prashant, talking about long term perspective and people who want to invest in PSU banking space. So, SBI definitely, is one of everybody's top picks there. But what is your suggestion? What are your top picks in that segment?
And alternative stocks would be again Canara Bank, which he is already trying to add those for the short term. Canara Bank looks very good for me in terms of valuations, trading below its one price to book valuation. So that would be one reason for me. Again, industry momentums would be very fast. I think the way RBI has given a lot of liquidity push from last 3 to 4 months, I think that will bring a lot of credit growth, lot of housing loan growth. So those that will bring a lot of NIM margins improvement in the banking system. So one would be Canara Bank, second would be Bank of Baroda, again the second biggest in terms of market share in the banking space, PSU banking space. So Bank of Baroda also looks good for me, short term as well as long term.
Sure. Thanks for that. Suggestion there, Prashant. With that, we have a caller joining us from Patna. Hi, Nilay. Good evening. Nilay, are you there on the phone line? Nilay, am I audible? I think there's some issue in the line, but we have Nilay's query with us. He holds 70 shares of Dee Development at 250 a piece, and he's looking for both long-term and short-term view on it. Firstly, I'd like to take the fundamental view on the counter. Prashant, are you optimistic on Dee Development? Should our investors stay invested or invest in this counter if not already?
Is looking good, but again, the stock is not looking good with respect to its ratios and the valuations. Trading at almost like 50p from the current levels and even price to book value of 2. P valuations are slightly higher with this kind of market cap, which is almost like 1600 crores. And the ratios of ROCs and ROEs are very much below 10%. So not comfortable to have a very optimistic outlook on the business at this point of time. Again, if the price correction goes to around, again, the nearest low, which was almost like it's 170, 180, then one should look at understanding the risk reward ratio, then buy the stock. But time being, I think it's a avoid stock for me.
Okay, so that's a avoid on the development for long term. And Kunal, talking about short term, how is it faring on the charts?
On a shorter term also it is negative. It is making lower low, lower high formation. Some buying has been seen, but it is not sustainable. Till the time it doesn't break about 270 odd levels, we won't suggest any entry at current level. If you're holding, we would suggest to take an exit because the trend is negative. If you slip below 210, again a downward momentum was 170 can be seen.
Okay, so with that, we have a WhatsApp query now. Vishwesh has written to us from Bengaluru, and he holds 1200 shares of Karnataka Bank at 175 a piece, and he is sitting on a profit of almost 40,000 there. So, Karnataka Bank just came out with its quarter 4 results also. Net profit was down 8%, net NPA is at 1.31%, gross NPA is at 3.08%, NI is also down 6%. So, these are not some healthy numbers there, Prashant. Talking about the fundamental outlook on Karnataka Bank, what's your sense on the counter?
I think the growth factor in the Karnataka Bank looks very weak for a very near-term outlook. So I think even the valuations are giving such kind of low valuation. The stock is trading almost like 0.7 times its book. So this shows there is no strength in the business model going forward. So for me, for a very near term to medium term, I think there is no big upside expected in the price action as well as in the business. Better to have an alternative stock like Federal Bank, which can replace the growth factor in the private banking, small banking stocks.
Right. So sell Karnataka Bank and switch to Federal Bank is what Prashant is suggesting for long term. And Kunal, talking about the short term outlook on the counter, do you also hold the same view as Prashant's?
Yes, the overall trend is changing. It is a minor trend changing. It is entering into a zone where it was previously seeing some distribution. So we'll be suggesting the same, take an exit. It will be a good bet to take an exit at this level. That is a hurdle at 215. It will be difficult for the stock to break 215.
Right. Thanks for that view. With that, we have a caller joining us from Karnataka. Hi, Surya. Good evening.
Yeah, hi, ma'am. Good evening.
Yeah, good evening. Please go ahead with your
Thanks
query.
for taking my call.
It's our pleasure. Yeah, please go ahead.
Yeah, the question is on Gail. I have been invested in the stock for more than 2-3 years.
Yeah.
And my price point at which I invested is 115, and I hold around 1,000 shares.
Yeah.
Would like to know the fundamental view of this share post the quarterly result.
Yeah.
And I can hold it for next 3 to 5 years.
3 to 5 years. All right. Because you entered at 115, currently it's trading at 185. So you are sitting on a decent profit there. And Prashant, what advice do you have for Surya there? He holds 1,000 shares of Gail, and Gail also reported decent numbers in its Q4 results. So what's your advice for Surya?
So if he's a long-term investor and a fundamental investor, I will advise him to hold the stock at least again 2 to 3 years from the current levels with minimum target of 220, 230 for next 12 months from the current levels. But again, the stock will deliver a very slow and steady return. So you will have to have that kind of patience to see a good long-term growth. But obviously, a fundamentally decent company in terms of valuation, trading at 11 P, and price to book value is also very decent, 1.5. With the ratio is also very decent. I think totally governed by the government with respect to the gas pricing, and also that would be one concern. But again, decent downside from the current levels, but long term you will need to have patience to hold with the target of 220 plus for next 12 months.
Understood. And Kunal, for those who want to invest in this counter, who are fresh, who are new investors, so are these the correct levels, or should they be waiting for any dip, shortly?
So at a daily time frame, it is forming a flag and pull pattern. So need to wait for the levels of 189, 190 levels. If it break above 190 level, then it is a good buy entry for an upward momentum towards 212 to 220 levels. So at current level, won't suggest a buying entry. We'll wait for the stock to go upward 190 levels.
Understood. Thanks for that. And just a quick reminder for our viewers. Viewers, this is your chance to get all your stock-related queries answered. So please pick up your phones and call us right away. The numbers are there on your screens. And with that, we have a WhatsApp query. Ashu Agarwal from Thane holds 100 shares of Raymond at 1,570 a piece. And he's bought it, last week only. So he hasn't mentioned the time horizon, so I'd like to take both the fundamental and technical view on it. Prashant, he is sitting on a loss of 1 lakh is what I can see right now. So do you have any suggestions there for Ashu?
It's a technically adjusted price and loss. Today there was a demerger of real estate company which got into adjusted in the price. So that is why he's seeing this loss. So for me, I think the company looks very strong. We have a fundamental view, strong view on Raymond for long term. As he said, he's from the Thane, and I believe Raymond has almost 100 acres of land in Thane, and that has been valued almost 26,000 crores. So for him, with respect to today's corporate adjustment, I think he will get one free shares of Raymond's real estate company free from its Raymond's Limited. So he will be getting that kind of benefit going forward. So once the Raymond real estate stock gets listed in next 1 or 2 quarters, then he will get some kind of good benefits. I think the 66% fall is a price which will be looking at for Raymond's real estate. So 1,560 was yesterday's closing price, and today I think 530 was the adjusted price for the automotive stock business in the Raymond business. And the rest of the 1,050 would be valued for the real estate. So I think going forward, that will have a lot of value, and he is getting 1:1 shares from the Raymond real estate. So overall, my recommendation would be hold and wait for at least 6 months to get that real estate company listed. And going forward, I think overall the target would be anywhere between 2,000 on a consolidated basis.
Understood. With that, we have a caller joining us from Cochin. Hi, Tanya. Good evening.
Hello. Good evening.
Yeah.
I wanted to know, among the companies that are scheduled to post their quarterly results this month, there are quite a few remaining. Do you suggest any good short-term sort of bets that we can take? Who's likely to post like a good result? Just their advice.
Okay, so although we cannot anticipate the results there, but we can just have some sort of estimates, that figures that we actually put out. Kunal, Tanya needs some stock recommendations for short term. So do you have any?
Okay, so in short term, surely we can go for Nuvama. Nuvama has given a good breakout. Today it has given a breakout of cup and handle formation. So it is poised to move towards 7,360 levels. You can keep a stop loss of 6,030 levels, odd levels, for an upward movement towards 7,467 level, followed by 7,800 levels. So Nuvama Wealth is looking great on the charts.
Understood. So Nuvama, Kunal is betting on Nuvama for short term. And on the long term, Prashant, I would like to, pose this question to you. Are there any top picks of yours or top 3 picks for our viewers who are watching us right now?
I think one stock would be SBI. I think that should be a wonderful stock one should focus on. Post the sale of Yes Bank, I think they will be gaining almost like 12,000 to 13,000 crores that will be booked in the first quarter of this financial year. So I think for a very short period of time of almost like 5 to 7% of momentum can be expected. Even though my overall target would be 1,000 for this financial year. So I think SBI would be a great stock in the portfolio and downside is protected. Second, I think again one should go for a stock like Inox India, which you was expecting a result-based strategy. I think tomorrow the results will be out. Inox India, so I think that would be a great stock to look at. We are expecting a good EBITDA margin growth, as well as the Q4 earnings should be stronger than Q3 earnings. If my assumptions are right, I think there would be a good 5 to 10% momentum in the coming 2 days.
Understood. So Prashant's top picks are SBI and Inox India. With that, viewers, we'll have to slip into a short break, but please keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back, viewers. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. And on the show, we are joined by Prashant Apse on the fundamentals and Kunal on the technicals. So with that, let's proceed further with the show with our first caller after break, joining us from Kolkata. Hi, TV Srinivas. Good evening. TV Srinivas, are you there on the phone line? I think we've lost the line there, but we have his query. He holds 1 lakh shares of Vodafone at 9.50 rupees and is sitting on a loss of, almost 2.5 lakh rupees there. So Prashant, even after the government's holding has increased in the company, the investor confidence has slightly been, positive on the company, but still fundamentally, are you optimistic on the counter? And or do you suggest any caution there for our investors? I think, Prashant, I'm not able to hear you. I think you need to unmute yourself.
It's unmuted.
Yeah,
Hi.
yeah.
So it's very high caution stock for me even at this point of time. Considering the government support from last many quarters or many years, the stock is not able to sustain well with respect to their fundamental valuations. Plus, the business model is still not getting into a very strict action to make some kind of good growth in the margins as well as in the profitability. Though the FPO was priced around 11 rupees, the stock did not sustain there, where they got almost 20,000 crores for their operational efficiency improvement. But I think the customers are not happy to stay with Vodafone. If you see every month on month, there are like 5 to 7 lakhs of customers going out of Vodafone and shifting to Jio as well as Bharti. So the risk of downside is still open. I think a stock can go towards 4 rupees or 5 rupees due to all these business reasons. But again, I think the investors have already taken risk of investing 1 lakh shares at 9 rupees and 9 to 9.5 rupees. So if he's a risky investor, I think I would like to advise him to add more at the lower levels, hold it for at least long term. There will be some kind of resolution plan, some corporate bid announcement going forward for 1 or 2 years. So then he can get at least 12 to 13 rupees in next 2-3 years period. So my assumption is something is going to happen like what happened with Yes Bank. So after a long time, some big investors from Japanese has come in to invest at 21.5. So such kind of activity may come into the picture, but again, the period is next 1 to 2 years. But downside is again open to 4 rupees. So risky investors hold it.
So it's a risky investment, but you can hold as some positive news might come in 1 or 2 years for the companies, what Prashant is suggesting. And, Kunal, on the technical front, it's an completely volatile stock. So what's your sense on the counter?
So looking at the counter, Vodafone India doesn't seem good on the chart. It's better to take an exit from Vodafone Idea, and it's better to invest into Jio Finance or Bharti Airtel. Anyhow, FIs have put a good amount of investment into Bharti Airtel. Any correction in Bharti Airtel would be a great opportunity to enter. So Vodafone Idea I won't suggest to hold, but surely we can shift into other telecom stocks. That will be Bharti Airtel or Jio Finance.
Understood. Thanks for that view, Kunal. With that, we have a WhatsApp query. So Amar holds 1,000 shares of Ola Electric at 89 a piece, and he is sitting on a loss of over 37,000 there. But currently it's trading at 51 and was up in trade today over 3%. So I'd like to take both the technical and fundamental view on the counter. Prashant, this is also one of the companies that is surrounded with a lot of news. It's always buzzing with something or the other. So what's your sense on the counter? Are you optimistic fundamentally?
Optimistic with respect to industry, yes, but with respect to the stock, I think there will be a lot of pain in the near term to medium term. The way we have seen a lot of big news headlining on Ola Electric from last 6 months, and even now I think Ather is a competitor which is also listed in the space. So there will be like price comparison, valuation comparison, business comparison, neck to neck with Ola Electric and the Ather Energy. So the competition will remain very high. There will be a lot of cash burn seen to make sure the market share is increasing towards Ola Electrical. So I think if he's already invested in Ola Electrical, I think he should also take some some shares in Ether Energy, because I think if the sector is doing good going forward up to 6 months to 1 year, I think Ola Electrical as well as Ether will do better. But there is a risk attached in this because of high competition and cash burning sector.
Yeah, and Kunal, on talking about the technical aspect of it, though as long as I can see the charts is just in the red. So what's your sense on the counter? Are you seeing any sort of uptick in the near future?
Okay, so on a daily time frame, there is a good volume at a lower level on the buy side. So this suggests some accumulation at a lower level. So till the time the stock is holding above 44, we might see some momentum in the stock towards 57 levels. And if breaks above 57, it can move towards 63 levels. So there is a good sign currently. Some accumulation is seen. Overall, if you look at the consumer durable as well as the electrical, this sector is really looking good currently. That is why we are seeing some buying in the Ola Electrical as well.
Right. Thanks for that view. And with that, we are joined by a caller from Chennai. Hi, Sucharita. Good evening. Sucharita, are you there on the phone line? I think we've lost the line there as well. But we have Sucharita's query with us. She holds 100 shares of Titagarh Rail at 733 apiece and is sitting on a profit of over 7,000. So Prashant, are you positive on this counter for long term?
Yes, very positive on this sector. Again, the way government is focusing more on the railway infrastructure growth. The company is into wagon manufacturing, passenger growth, metro trains, train electricals, and steel casting for all the railway kind of businesses. So I think if you see next 5 years, I think there will be a lot of focus from the government to develop this infrastructure. So Titagarh wagon will have a lot of good visibility of business as well as the profit. With respect to valuations, again very decently valued at 30p currently, and 4 price to book valuation. The valuations look slightly higher than the average one, but because the ROCs are almost 25%, the ROE is almost like 18%. So such kind of ratios will have a justification of 25 to 30p on the current ratio. So I think my recommendation will be on the hold, but at least have a look at 2 to 3 years as an investment perspective.
Right. Thanks for that view with Prashant. With that, we are joined by a caller from Bengaluru. Hi, Krishna. Good evening.
Yeah, good evening. My question is Cochin Shipyard. Okay, so I have 51 shares. I purchased at the rate of 569 rupees.
Yeah.
Okay, I just would like to know, I have two parts of the question. So how will be the technicals of Cochin Shipyard for another 2 years? Okay, and also I would like to know among these three, Cochin Shipyard, Natco and GRSC, which is the best? We can invest more.
You have invested in Cochin Shipyard. You hold 51 shares. And you want
rupees at which I purchased.
Sorry?
569 rupees is the unit price.
569. Yes. And you are looking for a 2 to 3 year outlook on Cochin Shipyard. Am I correct?
Yeah.
Okay. Do you want to add more?
Yeah, I just want to add more. And also my question is, among these three shipyards, like GRSC, Cochin Shipyard and Natco, which is the best?
Okay, so defense stock. You want a best defense stock bet.
Yeah,
am I correct?
That's what.
Yeah, okay. So, Krishna, I'm afraid that, we'll be sticking to one query. So, I'm sticking to this Cochin Shipyard query of yours. And we can come to the second part later in our next show. You can call us again. And Prashant, especially after the India-Pakistan, the escalation that has happened, the defense stocks have been in focus. And if you talk about today itself, Cochin Shipyard was up in trade today over 7%. So what's your sense on the counter? Is it advisable for, Krishna to stay invested in it for like 2 to 3 years or even more than that?
I think yes, as a portfolio stock, one should focus more on the defense stock as a long-term investment, not for short-term. See, 1 month back, nobody was discussing about India-Pakistan war, but now everybody is discussing on that. So that would be one reason why all these three companies were up in the recent times. And even today, the reason behind Cochin Shipyard would be given credit to the GRSC, that is Garden Rich Shipping. The results were out. Profits were into 2x and EBITDA was also 2x. margins almost doubled from the last quarter. So I think there was some kind of missing in these businesses with respect to execution from last 3 quarters. So that was the one reason why the stock did not underperform from last 3 months. But again, now the visibility is very clear. Government focus has been very much clear. I think export also orders may come to all three companies. But Cochin Shipyard is the best player in the stock. And if you want to invest again the best in the best, I think Mazagon would be the best stock to be invested.
Understood. Thanks for that view. And, Kunal, talking about the short-term performance of Cochin Shipyard, what's your sense on the counter? I'm sure these must be the elevated levels for a new investor to, start investing in.
So Cochin Shipyard is again a good buy at this level as well. It is trading at a good levels. A breakout above, we can see a breakout above 1,779 levels. So if the stock trades above 1,779, we can see a good upward momentum towards 2,190 levels. So it is at a good level currently. Looking at the defense sector itself, defense is performing, and we expect the defense sector to perform more. There is a good buying scene, good accumulation scene at a lower level. So expect Cochin Shipyard to go upward towards 2,190 levels out.
Yeah, thanks for that view, Kunal. With that, we are joined by a caller from Chennai. Hi, Venkat. Good evening.
Yeah, hi, good evening.
Yeah, how can I help you today?
Yeah, actually, I'm holding Ashok Leyland at the rate of 126. I'm holding 400 shares.
Yeah.
Just wanted to know on a long-term basis.
Understood. And for how long are you planning to hold Ashok Leyland shares?
Yeah, next 1 year.
1 year. Okay.
Yeah.
So, Prashant, 1 year outlook on Ashok Leyland. Currently, it's trading at 234 and he is sitting on a profit there. So, what's your sense on the counter?
Very decent valuations with almost 20 P going forward and even price to book valuation of 6. Even the ratios are very much decent to hold the stock at this point of time. I think the CV cycle is going to start for next 1 or 2 years. But again, the investors are looking for next 1 year. I think decent upside can be expected if the margins are sustained from last 2 quarters. So for me, a fundamental target would be anywhere between 245 and 250 for next one year.
Yeah, understood. With that, we are joined by a caller from Coimbatore. Hi, Keshav. Good evening.
Hi, thanks for this call.
Anytime. Please go ahead with your query.
Yes, I would like to know about this Natco Pharma.
Yeah.
I'm a little bit confused what this stock is performing. It's going up and down. And I'm already in loss for almost 1 lakh. So
yeah, I can see that. Yes.
I'll book the loss and come out.
Yeah. Okay. But initially when you actually invested in this stock, Keshav, were you planning to hold this for long term or short term?
No, I was planning for almost more than at least for a year. But the problem is, after seeing this recent announcement from US, this stock is mainly relying on foreign countries, right? So I'm just thinking whether I can continue. I should not waste my days.
Absolutely. So, Prashant, pharma sector has been quite jittery and seen a beating, especially after Trump's announcement on tariffs. And, the pharma sector has been quite in pain. So, in that, Natco Pharma has dropped significantly. He bought it at 934. Currently, it's trading at 828. So, what's your suggestion? Should he be booking his losses, or do you advise him to stay invested for some time? And probably, are you seeing any sort of, uptick in the counter?
Uptick, no. I think from the immediate standpoint, again, next 1 or 2 quarters, I think there will be a lot of pain still seen in the stock. You know how the December numbers were really bad. The operating margins went down to single digit below 10 from the average of almost 45 to 50 in the historical from last many quarters. So there is some kind of issue in the business. I think there would be some concerns rising out of their business model. So that would be the one reason why stock will be trading on a negative trend only. The investors already taken a risk. So I think if he can exit, then would be a right advice from my side again. Otherwise, if you would like to take a risk again, take a stop loss from the technical analyst and then hold it for at least medium term to long term. But time being, I don't think any upside immediately from the stock.
Absolutely. So Kunal, if you could just help us with the stop loss, what are you seeing on the charts?
So the strong support is placed at 729, but it seems the stock might lose that as well and can drop towards downward momentum towards 600. So doesn't feel that the stock should be hold at current level. There is a higher chance the stock might break its support of 720.
Okay, so you also advise to exit at these levels itself. Understood. With that, we are joined by a caller from Andhra Pradesh. Hi, Vamsi. Good evening.
Hi, good evening.
Yeah, how can I help you on the show today?
My query is regarding Tilaknagar Industries.
Okay.
I'm holding 23 shares at an average price of 293.
Yeah.
I want a suggestion. I want to hold this for a long term. I want a suggestion that is it a good stock to hold for long term and when I can accumulate more.
Okay. So Prashant, for long term, how is Tilaknagar Industries position itself compared to its peers?
I think the industry looks very good. I think the way how India UK trade deal has happened, so a lot of liquor export will be more from the current financial year. So that would give a lot of growth going forward for Tilaknagar Industries. For me, again, industry is growing faster. I think they should also do better going forward quarter by quarter. What level, I think my technical colleague can help him on understanding what level would be best level to buy more. But fundamentally, again, a good story is building up with the ratios of almost 22% on RSE, 25% on ROE. So that gives me very confident in terms of fundamentally holding for long term.
Okay, so fundamentally, Prashant is optimistic on the counter. And Kunal, for a new investor who wants to invest in this company, what are the levels that you suggest?
So currently the stock is trading in a good range. So an upward momentum can be expected in the stock at 331 levels. So it is better to wait for the stock to break 331 level. There is a small retracement. We can see some selling coming at 331 levels, all levels. So wait for a dip towards 280, 270, all levels will be a good buy for an upward momentum towards 360, 400 levels.
Understood. Thanks for that view, Kunal. With that, we are joined by a caller from Bengaluru. Hi, Rangesh. Good evening.
Good evening, ma'am.
Yeah. How can I help you today?
Ma'am, I would like to invest in Techno Electric and Engineering Company shares, ma'am.
Okay.
Ma'am, which is the price level should I buy, ma'am?
Understood. And are you a long-term investor, Rangesh, or a short-term?
Ma'am, 1 year period, madam.
1 year time horizon. All right, but I'd like to still take both technical and fundamental view on the counter. Firstly, he's talking about the levels. So, posing this question to you, Kunal, are these the correct levels to enter? Because currently it's trading at 1194 and was also up in trade today over 6%.
Yes, at current level that can be added. It has given a good breakout, a rounding bottom breakout has been given. Till the time the stock is holding about 990 odds level, the upward momentum can be continuous to 1321 levels. So it is a good entry point at current level as well.
Okay, and Prashant, are you optimistic on the counter? What's your fundamental sense on Techno Electric engineering?
Fundamentally, yes, I think business model is looking good, a decent company for a long-term investor. But again, Q4 earnings is very near, so I think I would like to wait and watch for Q4 earnings before taking a call on this company. If you see again, the company is a debt-free company and again delivering a strong dividend payout of almost 25%. So I think for a long-term investor, it's a good company to invest. But again, with respect to price point, I would like to wait for Q4 earnings to come and then take a call.
Understood. So Prashant is saying that he's waiting for its Q4 results to come out and then probably, he can make a suggestion or on the counter. With that, we are joined by a caller from Chandigarh. Hi, KK Sharma. Good evening.
Good evening, madam. I have 1,000 share of Chambal Fertilizer at 508.
Okay.
And I want to hold it for 1 year. What can be targets?
Okay. And firstly, congratulations that you're sitting on a profit of over 1 lakh rupees there. Nearly touching 1.5 lakh. So when did you buy these shares? I'm just curious.
About 8-9 months back.
So in just 8-9 months, you've made this significant profit. Kudos. Prashant, what's your suggestion to Mr. KK Sharma? Do you advise him to hold this counter for another 1 year and make more profits?
Fundamentally, I think fertilizer business can do better going forward. I think the early monsoon update from IMD will also give some kind of uptick in the fertilizer business. But again, Chambal Fertilizers, I think the stock has already moved well in last 3 to 6 months. So I think that would be a reason for me to advise him to book profit at this point of time. I think the Q4 earnings are also not so good as per the comparison with all the quarters. So my advice would be book profit at this point of time. I'm not advising him to exit the company, but time being the price action looks very weak. So for me, profit booking advice can be better.
Understood. So, Mr. Sharma, if you're watching us right now, Prashant is suggesting that you should be, booking your profits. With that, we are joined by a caller from Chennai. Hi, Avdesh. Good evening.
Good evening, ma'am.
Yes, how can I help you today?
Ma'am, I have Carborundum Universal in stock at the price of 994.
Okay.
And this, I am holding this stock from 1 month.
Okay.
Yeah.
Understood.
I want to know, ma'am, long-term view on this stock. Can I hold this or sell?
Okay. So Prashant, he's looking for a 1-year outlook on Carborundum Universal, and currently it's trading at 963, and it was also down in trade today over 2%. So firstly, are you positive on this company, or should he be switching to some other, company in the similar space?
Positive on the company, but I think valuations are not so comfortable for me at this time to tell him to advise him to hold it for long term. So there may be some kind of correction in the price, and even the valuation may come down to a better level. So if he can exit at this point of time and re-enter at the right level, anywhere between 900 and 880, that would be a good level for a very decent valuation company. But business model is really good for a long-term investor. But again, as he has only 18 shares, there will be a lot of pressure in the stock. So exit at this point of time and re-enter in a better levels.
Okay, exit at this point of time and re-enter at slightly lower levels is what Prashant is suggesting. With that, we have a WhatsApp query. So Shankar holds 100 shares of KPI Green at 550 a piece. He's looking for a short-term view on KPI Green. So Kunal, directing this question to you, how is it faring on the charts, and what suggestion do you have for Shankar?
Okay, so KPI Greens look good on the chart. Above 438, there will be a good upward momentum to a 486. Some profit booking might be taking a 486 level. It is a level from where previously selling was seen. The RSI is moving upward. The DI plus is trading about DI minus. That is good sign. The trend seems positive. Till the time it is holding above 390 odd level, we can expect the stock to move upward towards 484 levels.
Understood. With that, we have a WhatsApp query. Kunal holds 500 shares of Tata Steel at 107. And Tata Steel was also the stock of the day today. And he is sitting on a profit of over 24,000. So Prashant, talking about the fundamental aspect of Tata Steel, what's your sense on the counter?
I think the ecosystem of steel businesses in the world is getting better and better once the US and China deal has been eased down. So I think that would be a very great opportunity for a steel company to perform well going forward. Even I think fundamentally things are very much improving. The realization of the stock quarter by quarter are increasing. So for me, a near-term target would be like at least 170, 175. But I will advise him to hold it for at least more than 1 year from the current levels, where the target can be 180 to 200. So overall, very bullish on the steel sector, and Tata Steel can do very better. Their earnings were really surprising with respect to their European segment.
Yeah, and rightly said that Tata Steel, the steel sector in particular, is in focus and is doing pretty well. So Kunal, with that, I'd like to come to you, for investors who want to invest in this company, who are new investors. So what levels do you suggest them to enter Tata Steel?
Okay, so firstly, the stock is trading at a good level. So a breakout of falling trend line will be seen nearly around 159 levels. So a breakout trade can be done in Tata Steel at 159 levels. An upward momentum towards 170 and 185 can be expected. A downside till the time it is holding 150 levels.
Understood. Thanks for that view. And with that, we have a WhatsApp query. So Shakuntala holds... No, Shakuntala is actually asking that is it the right time to buy Shriram Piston at the current levels? Currently, the stock is trading at 2,446 and was also up in trade today over 3%. She hasn't mentioned the time horizon. So quickly, fundamental and technical view on Shriram Piston. Starting with you, Prashant, what's your outlook on the counter?
So the company has delivered a very decent number with respect to its March numbers. The margins have improved by 100 basis points. Even profits have been increased by almost 40 crores. So that gives a very fundamental, strong visibility in terms of the company delivering a better numbers. With respect to valuations, also very decently valued for a company with ROC of 26% and ROE of 23%. So my advice would be buy more on dips, and again not to just go and hunt the stock at this point of time, but every dip has to be bought and for long-term investments.
Okay, and a quick short-term outlook on Shriram Piston, Kunal.
So the stock has currently given a breakout of its all-time high. So, and again, it has been trading on a higher level. I will suggest for the stock to give a dip towards 2060 odds level. So near 2260, that will be a great entry. Currently, it is now daily time frame. The RSI has entered into the overbought zone as well. So there is an early sign that there might be seen some profit booking or a flat consolidation momentum in the stock. So a dip around 2260 will be a great buy for the stock.
Understood. Thanks for that view. And with that, I'm afraid that we are running short of time on the show today. But thank you so much, Prashant and Kunal, for answering all our viewers' queries so patiently there. So thank you so much once again. And viewers, that's all the time we had on Ask Profit today. But stay tuned as there's more lined up ahead. And Profit 360 is just about to start at 8 p.m.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Broader markets outperformed the benchmark Nifty 50 with strong gains across small cap and mid cap indices. Nifty Metal emerges as the top gaining sector driven by steel and national aluminium. Nifty Bank struggled, making its worst sectoral performance, weighed down by private banks. Hundreds of Indian travelers cancelled plans to visit Turkey and Azerbaijan following their support for Pakistan in its conflict with India. Over 50% of bookings to these countries combined have been cancelled in just 6 days amid mounting boycott calls. As boycott Turkey calls grow louder, JNU scraps its MOU with Turkey. After Apple boycotts in Pune, Udaipur marble traders cut ties with Turkey over their support to Pakistan. According to top sources, the government will intensify scrutiny of at least 7 major China-backed FDI proposals and joint ventures with a fresh and tighter review. This comes amid rising tensions, including China's recent support for Pakistan during the conflict with China. India withholds the ex-handles of 3 state-run accounts for spreading misinformation in the wake of India-Pakistan tensions. The first account to be withheld was media outlet Global Times, followed by Turkish public broadcaster TRT World and China's Xinhua News. The Union Cabinet approves a semiconductor manufacturing project by HCL and Foxconn under the India Semiconductor Mission, marking a key step in the country's efforts to build a self-reliant chip ecosystem. During its earnings call, Bharti Airtel partnership with Elon Musk's Starlink is clarified. Starlink will complement and not replace Airtel's existing services. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to take you through the latest in markets as well as national and international news. So let's get right into it and have a look at how the markets fared today. Broader markets outperformed the benchmark Nifty 50 with strong gains across small cap and mid cap indices. Sectoral indices mostly ended higher, led by metal and realty stocks. Nifty PSU Bank posted the 4th straight session of gains, with the Union Bank of India and the Bank of India leading the charge. The Nifty Bank struggled, marking its worst sectoral performance, weighed down by private banks. Let me quickly go over to my colleague Mahima for more on this.
Right, so in terms of the benchmark indices today, they closed around 0.3 and 0.26% higher. So both Sensex and Nifty closed around 0.3% higher. But broader markets did outperform the overall benchmark indices. The mid-cap 150 closed around 1.3% higher and the small-cap 250 closed around 1.4% higher. In terms of the sectoral picture, in terms of the indices, gains were led by metal and realty. Nifty Metal top gaining sectoral index led by SAIL, National Aluminium Co. Nifty Bank ended lower, worst performing sectoral index as private banks lagged. In terms of the broader markets, the Nifty Mid Cap 150 gains 3rd day in a row and the Small Cap 250 gained 4th day in a row. In terms of the PSU banks, gains were led by 4th day in a row and gains were led by Union Bank of India, Bank of India, as well as in terms of the Nifty FinServ and Nifty Bank, decline was seen 2nd day in a row. In terms of stock specific action, Tata Motors, Shriram Finance overall ended higher, top gainers of the Nifty. Garden Reach Shipbuilders, PTC Industries were the top gainers in the small cap 250 and Cochin Shipyard and AB Capital were the top gainers in the mid cap 150. So this is the overall view as to how markets have panned out today. We also spoke to Ravi Menon of Macquarie as to how IT stocks are to be seen ahead and what's the outlook like. Listen in.
The large cap companies are so big. We are not talking about 20% growth for a TCS, right? I mean, that's not missing. But we think the overall industry can actually be in like a 10 to 12% sort of growth range. That's the possibility for 3 to 5 years or even more. And I think that itself, and with the mid caps, of course, growing much faster than that, and select large caps within that, like a smaller one, like an HCL Tech, probably even delivering 12-15% growth, quite possible. And that's what we think.
Now, India is asserting a firmer stance on global matters, signaling clear strategic priorities. Indian tourists are cancelling trips en masse in response to Turkey's support for Pakistan during recent conflicts impacting sectors like tourism and trade, including the significant apple and marble industries. Additionally, India is closely scrutinizing Chinese investments to ensure they align with national security and economic interests. Social media accounts linked to state-backed propaganda have been restricted, countering misinformation efforts. A decisive shift in policy. India is now setting new boundaries in diplomacy, trade, and information control. Let's take a look. Indian travelers are cancelling trips to Turkey and Azerbaijan in large numbers following their support for Islamabad during the recent India-Pakistan clashes. Notably, Turkish-made drones were shot down by Indian forces during the conflict, fueling further public outrage. And the backlash against Turkey's support to Pakistan has also reached Indian academia. Jawaharlal Nehru University announced the suspension of its academic partnership with Turkey's Inonu University, citing national security concerns. Following Turkey's open support to Pakistan and the provision of military aid, amid these escalating tensions, a widespread boycott movement against Turkish products has gained traction across the country. Pune has emerged as a key city where the impact of this movement is being strongly felt. Traders in Pune have taken a decisive step by boycotting Turkish apples, leading to a noticeable disappearance of these imports from local fruit markets. In-depth details were taken by our correspondent Revati Hingwe from the fruit seller of Pune's biggest market, the APMC market.
Tensions were seen soaring high when there was a war between India and Pakistan after India continued with the Operation Sindoor. When Turkey extended their support to Pakistan by giving away the drones used by Pakistan Army in India while there was a war between India and Pakistan, and now its effects are being seen in Pune's market yard area, where the fruit sellers have started with boycott Turkey products by boycotting Turkish apples. To know more about the same, I have with me Mr. Jende, who is a fruit seller in Pune market yard. Let us know from him that what exactly they are doing under boycott Turkey products. सर, हम लोगों ने देखा यहाँ पे कि जब पाकिस्तान ने भारत पे हमला किया तभी टर्की के ड्रोन्स का इस्तेमाल किया गया था. उसके बाद बॉयकॉट टर्की प्रोडक्ट्स नाम का एक शुरू हुआ था. तो उसके बाद में पुणे से ये पुणे में ये शुरू हुआ. तो ये बॉयकॉट टर्की प्रोडक्ट्स कब से शुरू हुआ?
ये समझो 6-7 दिन पहले उन्होंने टर्की ने ड्रोन दिए थे पाकिस्तान को. तो उसके बाद हमने 3 दिन पहले से बॉयकॉट टर्की आइटम्स सब. तो ये ट्रेंड चालू किया. सबसे स्टार्ट ही पुणे में से हुआ और अभी पूरे भारत में फैल रहा है.
Meanwhile, in Udaipur, marble traders ended business with Turkey for siding with Pakistan amid the ongoing tensions. The Udaipur Marble Processors Association has already halted imports from Turkey on its own and urged similar action nationwide. In a letter addressed to the Prime Minister, they requested formal sanctions, especially targeting marble imports. Now, India imports between 14 to 18 lakh tons of marble annually, out of which 70% of that comes from Turkey alone. Moving on, according to top sources, the government will intensify scrutiny of at least 7 major China-backed FDI proposals and joint ventures, with a fresh and tighter review now underway. Several JVs, often proposed as workarounds to direct investments, may also be subject to delays and tougher compliance measures. This move comes amid rising tensions, including China's recent support for Pakistan during the military conflict with India. Since April 2020, India has mandated prior government approval for FDI from countries sharing land borders, with each proposal assessed on a case-by-case basis.
Yes, clearly after China opened support to Pakistan in a recent military standoff, India is tightening its grip on the foreign direct investment involving Chinese entities, signaling a toughened stance in terms of economic engagement, and FDI plays a huge role there. What we've been given to understand that at least 6 to 7 major deals which has been in the pipeline could face greater scrutiny. In fact, Indian authorities will have a fresh look on those deals under Press Note 3. Some of the JVs, joint venture, could be also worked out under the same regulation. But clearly the approval could take some time, and that could, delay the entire process and the deal as well, is what indication we are getting at this point. Sources also tells us that, the joint venture could be worked out in space like auto and consumer durable, which has been in talks and are in advanced stage, but that also require a monitoring and closer scrutiny. Press Note 3, as you remember, was introduced in April 2020 to sort of have a curb on the hostile takeover, and requires multi-departmental and multi-ministry approval for any such investment coming from land border which India shares with, including China. And since then, we have seen decline in the FDI inflows from China, but there is a clear uptick in the import from China, especially the mercantile import are concerned. So there has been some discussion in past whether to ease the restriction under Press Note 3, but at the given evolving situation, it's clear that India may further tighten the current regime. That could be considered, but as long as easing the restriction is concerned, is completely ruled out. And in fact, we would see some stricter compliance is coming in place as far as China-backed deal is concerned.
Meanwhile, India has also restricted access to several X accounts affiliated with Chinese and Turkey state-run media outlets, citing concerns over misinformation and propaganda that threaten India's national interests. Among the affected outlets are TRT World, a Turkish government-funded international news outlet, along with Chinese state-controlled news agencies like Global Times and Xinhua News. Meanwhile, Bharti Airtel posted an impressive 432% year-on-year increase in net profit, reinforcing its strong financial performance. During its earnings call, the company addressed its partnership with Elon Musk's Starlink, clarifying that Starlink will complement, not replace, Airtel's existing services. Airtel also outlined its pricing strategy, highlighting key trends like entry-level plans that will likely remain stable or see modest price increases, and higher tier plans that may introduce reduced data allowances, encouraging users to upgrade. Telecom Minister Jyotiraditya Scindia also commented on Starlink's entry and said that satellite technology is set to expand in India, and added that it is essential in areas where traditional towers and optical fibers are impractical.
जहाँ accessibility न हो mountainous terrain, और वो चाहे वो उत्तराखंड हो, चाहे जम्मू कश्मीर हो, चाहे हिमाचल हो, चाहे उत्तर पूर्वी राज्य हो, और चाहे देश के अंदर दूसरे इलाके जहाँ कनेक्टिविटी भी ना हो, वहाँ सैटेलाइट की कनेक्टिविटी होना बहुत ज़रूरी है। और जैसे मैंने आपको कहा कि पहले भी कहा है कि अब हमारे 2 लाइसेंस हमने दिए थे, अब 2 लाइसेंस प्लस एक लेटर ऑफ इंटेंट स्टारलिंक का इशू हो चुका है। TRAI ने अपना असाइनमेंट ऑफ स्पेक्ट्रम थ्रू एडमिनिस्ट्रेटिव असाइनमेंट के नियम भी निकाले हैं। अब शीघ्र ही, और वैसे भी 2 लाइसेंसेस होल्डर्स को हमने स्पेक्ट्रम एक्सपेरिमेंटल बेसिस पे दे दिया था उनकी सारी टेस्टिंग वेस्टिंग करने के लिए, और शीघ्र मैं मानता हूं कि सैटेलाइट टेक्नोलॉजी भी हमारे देश में जरूर आएगी।
Well, Bharti Airtel's earnings came out earlier yesterday, and today there was an investor con call.
key highlights from the con call, of course, is first about Starlink and second about tariff hikes. First, let's talk about Starlink. Now, from the MD, what we've heard is about SpaceX Starlink partnership in India with Airtel. They do have a distribution partnership which has been announced earlier. Now, Starlink, they say, will serve as a service and will give connectivity to the underserved areas or the areas where there is no terrestrial connection. Now this, of course, they have clarified, will complement Airtel's existing portfolio, and they don't look at it as a competition or something that will replace their services. Apart from that, Minister Scindia at a press conference today in Delhi mentioned that the Telecom Ministry has issued 2 licenses and 1 letter of intent to some of the global SATCOM players who are planning to come to India, which includes the likes of Starlink as well as Amazon Kuiper. Apart from that, from the Bharti Airtel con call, we had a hint of tariff hike that the industry could take, not just Airtel. So what the Airtel MD has emphasized is that the entry-level plans may stay the same or see a modest rise. Apart from that, tariff structure should move from small to extra large plans with value incentives is what he has emphasized on. He also sees some scope of rebalancing these tariffs and more price saturation. That's the word coming in from the MD of Bharti Airtel, Gopal Vittal.
Now, the Union Cabinet has approved the establishment of a new unit under the India Semiconductor Mission, marking the 6th facility in the initiative. Union Minister Ashwini Vaishnav shared details during the official briefing, highlighting India's continued push for semiconductor self-reliance and tech leadership. All eyes are on Washington as Commerce Minister Piyush Goyal begins a high-stakes visit aimed at advancing a strategic bilateral trade agreement with the United States. With global trade dynamics rapidly evolving, the outcome of these discussions could have far-reaching implications for India's economic trajectory, setting the stage for stronger commercial ties between the two nations. For more on the significance of this landmark trade agreement and what it means for India's future on the global economic stage, let's take a look at this report.
Commerce Minister Piyush Goyal is all set to meet US Trade Representative Jameson Greer and Commerce Secretary Howard Lutnick in Washington. The stakes are high as India pushes for early wins in a bilateral trade deal aimed at boosting two-way commerce to $500 billion by 2030. This visit, scheduled from May 17th to 20th, builds on talks held in Delhi in March and Washington in April. The terms of reference for the Bilateral Trade Agreement, or BTA, are now finalized, covering 19 chapters on goods, services, tariffs, and customs. The backdrop is challenging. The US and China have slashed tariffs on each other by 115%, renewing their trade engagement. This shift threatens India's pitch as a manufacturing hub, making robust US-India trade pact more critical than ever. Following the ministers' meetings in person, sectoral negotiations are set to begin, building on the progress made in April's dialogue. The goal is clear: create a framework that drives economic growth while navigating global trade headwinds.
With the US-India trade talks gaining steam, all eyes are on Washington this week. The outcomes could shape India's economic strategy for years to come. Reporting for NDTV Profit, this is Rishabh Bhatnagar with camera person Surat Singh.
Absolutely, all eyes on May 17th, where this 4-day visit undertaken by Commerce Minister Piyush Goyal will actually commence to Washington. Let's shift focus to what's happening in Mumbai, where the Metro 9 will be a significant milestone in urban connectivity connecting Mumbai and the MMR region. It will help reduce vehicular traffic congestion on the Western Express Highway and in return reduce pollution. A person from Mira Bhayandar will now be able to travel directly to Andheri in the western suburbs and then further travel to Ghatkopar, Versova and the international airport. Metro 9 will be inaugurated for the public soon, and NDTV's Abhishek brought us this report.
The trial run of Metro 9 connecting Dahisar East to Mira Bhayandar was flagged off today by Chief Minister Devendra Fadnavis along with Deputy Chief Minister Ajit Pawar and Eknath Shinde. The first phase consists of 4 stations from Dahisar East to one station. We are right present here, Kashigaon, that is in Mira Road. And it is an important milestone as it will boost urban connectivity of Mumbai and Mumbai MMR region. And clearly, if a person boards the metro from Mira Bhayandar, he can directly go up to Andheri, and from Andheri he will have options of different metro connectivity to either go to Ghatkopar or to Versova or in the Andheri East area. Definitely, this is one of the important steps concerning urban connectivity, and we need to understand that it will reduce traffic on Western Express Highway. Also, the important bottleneck that consists at Dahisar end, that will now not be there or will be reduced by this important inauguration of the trial run today, which will be soon inaugurated by Chief Minister Devendra Fadnavis also. Let me show you the traffic congestion that takes place, and this is what it looks like, and from which Mumbaikars or people living in MMR region will be getting rid of. And that is what is an important milestone which has today, the trial run has begun, and soon what we can understand that it will be inaugurated for the public.
Now, Purnam Kumar Shaw, a border security force personnel detained by the Pakistan Rangers after he inadvertently crossed the international border last month, was handed over to Indian authorities at the checkpost in Atari today. The 40-year-old BSF Jawan, posted in Punjab's Firozpur, crossed the border unintentionally on April 23rd, a day after the heinous terror attack in Jammu and Kashmir's Pahalgam that left 26 people dead. India has officially launched the e-passport, combining traditional passport features with advanced electronic technology to enhance identification and security. The initiative is part of a pilot rollout under the upgraded Passport Seva Program version 2.0, which went live on April 1st, 2024, according to the Ministry of External Affairs. Ramakrishna Gavai took oath as the 52nd Chief Justice of India today at Rashtrapati Bhavan. President Draupadi Murmu administered the oath with dignitaries including Prime Minister Modi and former CJI Sanjeev Khanna in attendance. Chief Justice Gavai, who joined the bar in 1985 and was elevated to the Supreme Court in 2019, will serve a 6-month tenure before retiring in November. In response to escalating tensions between India and Pakistan, the government has enhanced External Affairs Minister S. Jaishankar's security by adding an additional bulletproof vehicle to his convoy. Dr. Jaishankar, already under the Z category protection provided by the CRPF, will now have increased security during his movements. The Delhi police are also reviewing security for other high-profile officials who have publicly condemned Pakistan's actions. And now, quick look at what else is making news around the world. Canada's new Prime Minister Mark Carney unveiled a leaner cabinet on Tuesday, naming Anita Anand as the new Foreign Minister, replacing Melanie Joly. Carney trimmed the cabinet size to 29, down from 39 under former Prime Minister Justin Trudeau. India's External Affairs Minister S. Jaishankar congratulated Anand on her appointment via social media. The US government announced an additional $450 million in funding cuts to Harvard following $2.2 billion slashed last week, citing discrimination concerns. The move came a day after Harvard's president said the university shares common ground with the Trump administration. The White House claims the crackdown addresses anti-Semitism and aims to curb diversity programs. UK Prime Minister Keir Starmer doubled down on his hardline immigration stance. reaffirming that settlement in the UK is a privilege that is earned, not a right. The statement shared on X follows a series of reforms aimed at cutting net migration. Starmer's new wave of crackdowns marks a sharp tone from the Labour leader, signalling no plans to soften the country's approach. Microsoft is laying off around 6,000 employees, roughly 3% of its global workforce, as it trims management layers and pushes deeper into AI integration. Nearly 2,000 job cuts were confirmed in Washington state alone. The company said the move aims to streamline operations and help employees focus on meaningful work by leveraging new technology. The US has imposed new sanctions on 3 Iranian individuals and 1 entity linked to Tehran's Organization of Defensive Innovation and Research, citing continued nuclear escalation. Secretary of State Marco Rubio said Iran's enrichment of uranium to 60%, well above the 3.67 cap under 2015 deal, underscores the threat. The move comes just a day after the 4th round of nuclear talks concluded without breakthrough, though both sides expressed cautious optimism. Glacier experts from India, China, Bhutan and Nepal gathered in Nepal's Langtang region to pay tribute to the rapidly vanishing Yala Glacier, one of the most studied in the Himalayas. Situated at 16,700 feet, Yala has shrunk by 66% and retreated 784 meters since the 1970s. The International Center for Integrated Mountain Development warns it could become the first glacier in the eastern Himalayas to be officially declared dead. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day.
Hello and welcome to NDTV Profit. You're watching Earnings Edge and we have with us PB Balaji, who is the Group CFO at Tata Motors. Balaji, interesting times, too much happening globally in terms of tariffs, US, China, India, UK and now India, US. And in middle of that, I think both the businesses are now net debt free. How do you sum up the quarter and the year for Tata Motors?
Thank you. Firstly, thanks for having me on the show. The year has been a very good year for us. It was a challenging year. It was not an easy year. And also it is a year where the comparator was pretty strong. We had a very strong FY24, it was a record year. So that way I'm pleased that be it on the revenue side or on the profit side, we beat last year in this kind of an environment. Why that's important was that it tells you the underlying fundamentals of the business are doing well. And yes, there may be operating challenges on a growth level, which we will deal with, but intrinsically we're in a good place. That's an important part of the turnaround, that you'll need to deliver a resilient performance under all conditions. And that's also the reason why we also declared a dividend of 6 rupees per share. It's a sign of confidence that we can, because last year the ordinary dividend was $3, the special dividend was 3 rupees. And this year we've taken a final dividend ordinary at 6 rupees, which is a sign of confidence that we can sustain this performance, number one. And at the same time, the external conditions are a bit unclear and challenging at the same time. Challenging means we can start executing strategies. It's unclear. We don't know which way it's going to go. So we just need to wait for much more clarity to emerge before we can move. And if you take the US-UK tariffs, yes, it's a great, finally it happened. But we shouldn't forget that it's 2.5% tariff that's gone to 10%. 25 maybe have come down to 10, but 2.5 has gone to 10. So we still need to ensure that we keep our house in order, do our disciplined cost execution, cash execution, choose the right pockets of growth, ensure where inevitably we need to put up pricing. All that we'll have to take care. At the same time, there is also, we don't know whether it's going to be retrospectively applicable from April 3rd. We don't know whether it's applicable for parts and accessories. There are a lot of unanswered questions on that, which I'm sure will emerge in the coming days. So that is one part of it. If you take UK-India, that's again, it's an excellent development there because it augurs well for the future. My current cars are anyway all locally CKD manufactured, barring the Defender, and therefore it won't impact the current cars that are already there. But when I look for future cars, that we should be able to get it into the market faster at global prices. But here again, we need clarity on what are the quotas, what are the speed at which the 100% goes to 10%. So we need more details, which I'm sure will emerge in the coming days. And that's why we are dealing with a strong delivery. At the same time, we need to deal with these uncertainties as well.
How do you look at FY26 in this scenario? Means are you penciling in a growth, or at least a growth over FY25, or is it going to be a strong, robust growth with respect to volumes and value coming in?
See, firstly, I think one thing we have been very clear is that we never run the business for a quarter or for a year.
That's why I asked FY26.
So we always position the whole business at all points in time in the right direction. So for us, the fact that investments continue apace should give you enough and more indication that we are absolutely feet on the pedal when it comes to the growth agenda and the investment agenda. What we are conscious of is that I think we need to get tighter with respect to our cost and cash agenda so that we can navigate whatever noise comes on this front. At the same time, we should be clear that we'll have to be super agile. Wherever pockets of growth emerge, you'll have to go and be able to tap into it and deliver on that. Which I think Tata Motors has more than adequately demonstrated the ability to move things with speed and with agility. That we will continue to execute that way. And the demerger just gives us that additional ability to drive focus on the CV side and the PV side much better.
I was coming to that because, that's a domestic factor which is going to play out over the next 2 to 3 quarters, which is there. And how do you see both the businesses now placed now that they would be independent maybe from October onwards?
So I think firstly they're in a very good place, both the businesses. The fact that you got net debt free is a huge relief for both the businesses, because we shouldn't forget there's almost a 4,000, 5,000 crores buffer that has got created if you go back to earlier era to where we are now, which gives us the flex if we have to flex the P&L. At the same time, if you look at the CV business, let's take one at a time. Barring the small commercial vehicle business, I think every part of the business is firing very well. And this is a year where we hit the 12% EBITDA margin. We grew margins when our revenues declined, which haven't happened in CV for the last 25 years. That business delivers a ROCE of almost 40%. It's a rock solid business where the market shares of the heavies, the intermediates, the buses are all in a very, very good place. And the realizations are stepping up, profitability is stepping up, and we are able to now deliver value there at a very strong ROCE. So that business, when it demerges and then becomes a standalone business on its own right, it's got a very, very strong cash generation potential, which it's been demonstrating. And we would want to keep that going on that front. and use that to go deeper on all other aspects of the business. I think when we crack the small commercial vehicle business, which we are confident we'll do it this year, I think that will also give you higher returns in that business going forward. So CV in a good place, be it the balance sheet, be it the shares, be it the profitability, cash flows, any metric that you take, that's in a good place. CV cycle, let it turn, let it come whenever it comes. It doesn't matter, because anyway we are stepping up our cash flows and profitability even in a down cycle. So it's only upside from here on, from that perspective. Passenger vehicle side, I think last year was a year of consolidation where we did about 13.2% share. And the thing that we should have done a better job of is on service, where the growth came in so fast over the last 4 years. The service requirement was way ahead of what our capacity to serve was. That has got fixed in the last 6 months. Another 3 more months, we should get this completely nailed down. Then you have the product offensive coming in. If you look at last year, SUVs we did well. The only product category that went down for us was the hatches. Tiago has been relaunched, Altroz has been relaunched just now. With that, we would expect to see that come back again. And we then have the Harrier EV launching in, the Punch MCE coming in, Sierra coming in. So there is enough and more products for us to. Our product offensive is from competition was last year. For us, it is this year. This combination should help us deliver growth on the PV side. EV side, the only area where we lost out was the fleet segment, which is again famed to incentives went away. A few of the EV fleet players had challenges in their own. That is something we need to attack. There is a substantial CNG segment out there in the fleet side. We are clearly looking at products that can go and cater to that segment, and you should see that play out in the course of this year. So if I say when the demerger happened, that business is already cash positive, and it has a task on hand to pick up another 100-200 bits of profitability on the EBITDA side, which it will deliver the course of this year. Shares going up, profitability going up, balance sheet remaining strong. The PV business, and it is now cash positive, the entire PV business, no challenges there. That should take care of, it can stand on its own legs. And JLR, we have consciously said all the capex will be funded out of operating cash flows, even in this environment. So we are having a good upside coming through as far as the PV side is concerned, despite the tariffs, despite the global environment, despite EV competition, everything laying out there. So even if I look at assuming this year, what we see right now is the worst of times for JLR and PV, you are still delivering these kind of numbers. So the upside is only from here on. So we have enough in our kitty to give us sound confident. The only reason we said, okay, the next obvious question is, why would I not put a guidance on top of all this? I'm sure your eyes were popping out on that. I'm not surprised. If we have always said whatever guidance we put, it needs to be credible, and we should hold ourselves to account. You tell me how will I put a guidance and I don't even know whether the tariff is effective retrospectively or not. Mathematically, I can't put it. So let it come through. We have said, okay, hopefully we'll get clarity by the investor day. The minute we get clarity, we'll put it out there, because it also helps us to go for it.
Sir, one question on the passenger vehicle side specifically. You spoke about that the service was one thing that you focused on last year, and I think the last time we spoke to you after quarter 4 of FY24, you mentioned that you were expecting a 3 to 5% industry growth, and that panned out. But for you specifically, the growth was negative for FY25. You mentioned almost 4 to 6 new launches, some going into petrol, a couple of refreshes. But in FY25, it was a year of recalibration. Was that something that from the onset was the plan? Because we've seen one of your closest competitors take market share this year, while the other industry players have also suffered. I think the expectation from Tata Motors from FY24 was industry growth. So how would you tackle that question? Because it's a fall in sales essentially in this month at a time where you've planned so much in FY26. The refresh is also a couple of years. So in terms of planning, how has that happened between the last year and this year?
See, last year the thing that did not work in our favor were two things. One was the hatches segment, where we lost substantially more than what we should have lost, because we grew much lesser than the market. And the second was the fleet segment sales error. SUV segment, we are in a good place, and that continues to do well for us. I think the hatches segment, we didn't realize the weakness of the product range till the relaunch happened. Once the relaunch happened, Tiago is coming back into the equation quite nicely, so we should get that picked up. Maybe the fade was simply too sharp on that side. Look at the EV segment, the FAME incentive-led fleet sales. I think that was beyond, it's just nature of the market. Our market structures was like that because the Tigor EV did not work at all last year because of the fleet segment sales. That is quite a substantial portion of it. But the rest of it have done well for us. And I think with the stabilization of the battery prices and the put-on prices therefore stabilizing, we should expect to see a more sensible portfolio. If I have a one product launch, then the pricing I can do whatever I want. If I have a full range of products that are already in the market, for me to intervene in one price also means that I have to take the full piano has to be worked with. That took us a little bit more, it was more challenging than what we thought it would be. But as we get into this year, battery prices having stabilized, we are on a good wicket on that side. And we've also now got flex in terms of the range of battery packs that we can put onto it. So all this is going to give us the benefit as we go forward. Add on top of it the PLI benefits that are coming in. That gives us ammunition to actually play this much better than what we could last year, because the PLI benefits came in only by Q3. So Q4 has been a decent play, but the losses that we suffered in Q1 and Q2 took us a while for us to recover from. But that I'm confident from here on we should get that right. And internally also, we had such a rollicking growth for the last 4 years. Your systems, processes, business planning, everything also works in one direction. You needed to correct a few things. We have used this time, that's the reason the year of consolidation, we have used that to fix some of the internal processes that were a bit off kilter in this kind of a growth environment.
Would you also say that last year you mentioned 3 to 5% growth for the industry? Is that analysis again for FY26? And do you expect Tata Motors to outperform comparatively? I know you can't quantify, but significantly anything that you can share?
We are absolutely clear that this is a year where we'll go significantly higher than the market. And it is backed by product launches and the fact that the service network has been fixed. Those were the bleeders for me last year. So having fixed that, I should get the kicker this year, with competition also now more or less finishing off their product launches the way their plans are.
You know, FY25 at 13.2% market share. So do you see that market share going up in FY26?
Absolutely. It's a growth plan. Share growth plan is what we are currently working with.
So with new launches, the marketing cost also would be something to look at. How would that, because in this year we've seen the margins also drop a bit, and I'm sure that your expectations would also be to grow that substantially from...
See, more than the FME, that was the product, the costs came down because of pricing actions that we had to do and correct for inventories that were already there in the market. I think that is now behind us now, and whatever FME you will get, if your contribution margins are strong, FME can be funded, and those corrections have also been done. So I'm confident we'll get the share increase and the double-digit EBITDA that we have been guiding for. That should be very much the plan for the current year.
How do you look at the JLR as a operation? Because you said that it's now cash. You're going to fund everything from the cash flows for JLR. What is the kind of pipeline that you have for JLR, and what is the capex plan that you have for the JLR?
See, the main launches that are coming up are the Range Rover Electric. Then you have the Range Rover Sport Electric coming through. Then we have the full Jaguar, the new world of electric Jaguar starting to come through. So next 3 years is a super intense launch phase for JLR. And we start with the Defender Octa that is just about getting launched at this point in time. So for that, the capex plan is about 3.8 billion is what we have guided the business. Last year we did about 3.8 billion of investment. That will be broadly in the same ballpark range this year as well. And that should be funded by the operating cash flows of JLR, even in the worst of times.
Two key markets that you have, one is China and one is US. 34% coming from US for you, and I think Defender is coming out of Slovakia where the rates are much higher. How do you plan to manage that kind of, and is there a way you can shift production to UK or any other market?
No, in the short term we will not be able to shift production from there to here. So we'll have to deal with it as one of the cost elevators that's going up, for which the source of funds will need to come out of warranties, out of material costs, out of how we sell better mix. And that's the whole transformation program that has been drawn up, which we shared briefly yesterday. And we will talk about it in greater detail on 16th. The intention is to create a kitty of costs and cash, which will help us offset these numbers that are coming through. The question is how fast can we execute them, how much of it will land in year, in quarter, and how much of it is going to spill over into next year. So obviously the teams are on message to say that we do it as fast as possible.
the expectation was that maybe at the end of FY25 you will show us a pro forma P&L of how CV is going to look and how PV is going to look. Will that be also something which you will be showcasing?
CVP, we already guided the CVP, no changes as far.
The P&L point which for the markets to understand how both business individually looking in terms of.
See, what the P&L side we already guided for. We have said CV is going to be a double-digit EBITDA business, growing share, and the implication, and it will continue to be a very strong ROCE business. So that has been guided. We stick to that. No change in that. PV business, you said the first port of call is to hit the 10% EBITDA margin. And that is something we fell short of this year. We should have hit it this year, but we are down from that perspective. We want to get back to the 10% EBITDA and grow share in that business. The most important thing metric market is looking for in PV will be continued share growth and continuing to drive EV penetration in our portfolio and delivering a 10% EBITDA on the PV side. PLI benefits are a given, so that will continue to play out. You put this together, the PV business is cash positive despite investments in the EV side. That is how we want to play this part of the portfolio. JLR, we are not in a position to put a EBIT number there simply because too confusing, as we just said. But we are clear whatever capex they require, no pullback of capex, that will get funded by operating cash flows. So that gives you the framework on which to hold the business responsibly. And then everything else that we are able to deliver flawlessly is upside to this case. So we are at least drawing the line in terms of where this business can't go below. And now the question is, what do we do on the upside?
You mentioned that last year was a very good year for you in the US, like roughly about 1.2 lakh units sold. That might be a little bit under pressure this year. I think if anything that you can talk about that. And second was in terms of JLR, because your Defender is a very strong brand and that's been growing very well in India as well, in the US as well. So the other regions which you have, because UK and Europe, you spoke about a little bit that the growth has been slower and you are expecting that to come back in next year. But the other regions, if you can talk a little bit about that, is that where do you target that? Because essentially the growth has to come. I think that would be something to watch out for, right?
See, the markets that are starting to do well for us is now UK is coming back very strong. The reason it's coming back was that last year was impacted by the insurance issues that we had, the theft issues that were there. That's all now completely cleaned out. So the cancellations are collapsing there. So we are in a good place on the order pickup on the UK side. So UK will be the top performer that we would want to focus on, where any volume risk coming out of US, we will want to pick up there. We will want to hold China steady, because I think China, we have done very well compared to competition in that market, and that's the reason that we are amongst the only few OEMs which delivered on our guidance and did not drop our guidance at all this year. We held it, and despite market disbelief, we have delivered on that. That is because China is an area that we have played our cards very well, learning from our experience in 2019. That was a challenge there. If I hold China and whatever US volume pressure comes through, I first want to absorb it in the UK. Europe is starting to grow back again. It's starting to gradually come back for us again. And that is something we'll want to incubate and do it carefully. The upsides are all sitting in the rest of the world, where Middle East is doing well for us. India is doing well for us. We'll want to see how much we can pick up on the slack that's coming from the UK, from the US onto these markets. So a little bit of remix of demand, strong focus on cost and cash. Then the full portfolio will be able to hold it together and say that how do you grow from here on, both on the profit side as well as on the growth side. But that will require us a little bit more time for us to work the whole problem out.
Balaji, we are running out of time, but we haven't spoken of one segment, which is electric vehicles. You're ending the year with 55% market share, but that segment saw hyper competition in the 12 to 20 lakh mark, where your market share is around 30 to 35%. How do you plan to revive that, and are there enough products coming in your portfolio in this year to plug those gaps?
Sorry, what's the consumer like there as well? Is there a second car that people are purchasing as an electric? Because that's something that we've seen in electric scooters as well, not comparable. But the 12 to 20 lakh range has gotten hyper competitive, but based on India's
so I think it's a mix of play. Let me answer both the questions together. Let's start with the customer. It's always a better place to start. I think we are finding first purchase coming into the EVs directly, but that has slowed down compared to what it was in the past. At the same time, second car is now becoming very much a par for the course in terms of people picking up the second EVs there. But if you look at tier 1, tier 2 cities, it's becoming the first car itself. But park that point. I think it goes back to the other point that is there, which is how do you step up penetration of EVs in the overall port? That's a big question to answer. I am absolutely relaxed as far as competition is concerned, because more competitive is good for the market in terms of where the game is not about market share. I kept seeing it from day one, even when we are 85% share. The issue is about how do you drive penetration of EVs. And today the market is only 2.3%. If that has to go to 30%, you will soon find people have no choice but to push EVs onto just from a Cafe 3 perspective. Park that also aside. We have a full range of portfolio coming in. And we are the only player who start from an 8-9 lakh car all the way up to a 25 odd lakh car. Then that will go with Avinya coming in, it will go even higher. So we have enough product introductions coming through there. In the segment that you referred to, I think Nexon itself is now starting to go very strong post the relaunch. Then on top of it, you have the Harrier EV coming in. The Curve has just been launched in that same price segment. Then you have the Sierra coming in. And then the Harrier EV is there. So there's enough and more products available for us to play the game. I think our job as a market leader is to continue to drive mainstreaming of EVs, for which focus on chargers, focus on range, focus on put on price. This combination will then get cracked. So, and with the fall in battery prices, one of the things that really confused the market last year, and normally it happens in markets when price corrections happen sharply, is people just wait. I think now prices have stabilized, the confusion of hybrids is gone, and then suddenly you realize that the market is starting to come back again. And more competition means that the conversation also starts moving into EVs, then may the best player win.
You know, last time when we spoke to you, you spoke about the fact that the differential is going to come down and going to, are you seeing that?
Already, curve is matched, right? The curve ICE and EV prices are matched. So the matching of it particularly happens in the higher end segment, because then the GST difference is also substantial. So we are able to pull it off even easier on the higher segment. But even in the lower segment, if you look at the TCO perspective, EVs are comfortable in that respect.
Because maximum volume comes in that segment, 12 to 20. So you're seeing that happening there also, right? Balaji, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
My pleasure. Thanks for having me on the show. Take care.
We're talking about Ask Automotive, and it's in focus because it's a good set of numbers. Net profit is up as much as 21% in the quarter gone by, 57.6 crore rupees or thereabouts, stock reacting positively. There has been an expansion in the margins as well, to the extent of close to 2 percentage points. It's come in at 12.2% compared with 10.5% in the comparable quarter, and revenue is up as much as 9% as well. That's just a snapshot. Let's find out more about what the numbers look like under the hood. We're joined by Kuldeep Singh Rathi, who's the chairman and managing director of the company. Thank you so much, sir, for taking the time. Let me ask first about the aluminium lightweighting precision. Is it still expected to outperform the growth of the ABS business in FY26?
Good morning, Alex. Yes, as regards the aluminium lightweighting precision solution, we have grown by 28% in the last financial year, and we will keep on, we'll be outperforming in this segment in the next financial year also. ABS, since we enjoy more than 50% share of the complete Indian market, all the segments, so that will grow as per the growth of the industry.
Okay. Mr. Rathi, just wanted to get an overall understanding with respect to your new partnership with the new Japanese company that you've entered into. And this is for high pressure die-casted alloy wheels. What is the kind of synergy that you're expecting from this particular acquisition?
Good morning, Mahima. This is the technology that with this new technology, high pressure die casting alloy wheels, they are already supplying in Japan and to the Japanese customers. And we are lucky to associate with them. And this whole technology transfer and the new setting up the new plant will take place in this particular financial year. And we have the orders for the next financial year to start supplies,
And how much of quantification of that order stands, and how much of a revenue will that generate for you?
We hope to generate extra 250 crore revenue from this particular collaboration.
Okay, and you had also signed a collaboration agreement with a Taiwan manufacturer as well, which was for two-wheeler alloy wheels in Feb 24. Just wanted to get what's the current progress there and what are the timelines looking like?
There also the progress is very good. The product is already under advanced stage of testing. We hope that we should receive the approvals by June or July end. And once the approvals come and the pilot lot supply goes, we feel the complete supply should go in the second half of this financial year.
Half of this financial year is what you have to watch out for. All right. Can you give us an update, sir, on this Karnataka plant, the latest one? Have you ramped up to full production there?
No, not we. We have just started the commercial production on 14 January. And as you know, first 2-3 months, the QAVs take place. Most of the product QAVs, part QAVs have been completed. And we expect the good supplies in from this quarter, and we'll be EBITDA positive from this quarter.
From this, okay. So then from that perspective, based on what you've just told us, and my assumption is that you're going to be ramping up capacity utilization through the year. Can you give us a sense of, one, where you anticipate utilization to move over the course of this year, and also the sense of how much you're spending on capex? You've already set up this new plant. Any need for additional capacity? Will there be a greenfield, for example?
This year, from the Bangalore new plant, I think by the end of this financial year, we'll reach a capacity utilization of 60-65%. So we need to move further ahead. And being an optimist, as you know, I see a very bright future for the two-wheeler sector. And we'll be investing close to about 450 crores in the new plants, or adding the capacities in the existing plants in this particular financial year.
Mr. Rathi, just wanted to understand, you've ended FY25 with a top line of 3,600 odd crores. Margins also steady margins at 12 odd %, and net profit also at 248 odd crores. If you take a look at your 3-year CAGR, your sales has grown by 21 odd %. Even your net profit has grown by a CAGR of 44 odd %. Do you expect that momentum to continue? And what is the kind of top line and bottom line growth that you're expecting by the end of FY26? Where will this number go from 3,600 odd crores and 248 odd crores in the bottom line?
See, I can't say the number, but yes, we have outgrown the industry for the last 30 years, and we'll be outgrowing the industry, and we'll be growing close to the mid-teens. And the revenue growth will be there, and the margins will also certainly improve. But yes, we will be, with the extra capacity utilization, we expect more and more economies of scale, and we expect that our EBITDA margins will improve at least by 150 basis points in this particular financial year, but we'll be trying to achieve 14%.
Okay, all right. Thank you so much, sir, for taking the time. A pleasure speaking with you. And that 14% is something to aspire to, certainly.
Yes, certainly. Even we are working hard to achieve that.
Absolutely. Thanks so much for taking the time. Look forward to the next chat as well.
Thank you so much. So nice. Thank you.
Take care.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome. You're watching The Big Question. I'm Tamanna Inamdar. Days after India showcased its military and diplomatic prowess in the wake of the Pahalgam terror attack, which killed 26 innocent Indians, and the subsequent Operation Sindoor that followed, a new front is opening up. Not on the battlefield, but through the power of the Indian people. Passports and wallets. And now India is looking to make use of its soft power to hit backers of Pakistan and Pakistan-sponsored terrorism. Calls for boycotting Turkey and Azerbaijan have taken center stage after the countries expressed its outright pro-Pakistan stance following the Indian Armed Forces strikes on 9 terror sites in Pakistan and Pakistan-occupied Kashmir. Not just this, Turkey also supplied drones to Pakistan, which the country used to target military installations in India, all of which were thwarted by Indian forces. Incidentally, Pakistan Prime Minister Shehbaz Sharif was also in Turkey when the Pahalgam terror attack took place on April 22nd. It is now due to this stance of Turkey that Indian citizens, including politicians and actors, are urging Indians to boycott travel to Turkey, and the impact is already visible. NDTV Profit has learned over 50% of bookings to both Turkey and Azerbaijan from India have been cancelled. In the past 6 days, travel companies have joined the movement by pausing bookings to these countries, citing national sentiments. Travel platforms like Ease My Trip, Exigo, Cox & Kings, Go Homestays have all either paused or suspended flights and hotel bookings to Turkey and Azerbaijan. In a strong gesture, Goa Villas announced that they will stop offering their accommodation to Turkish nationals due to Ankara's non-cooperative stance.
Tour operators and online travel agents are seeing mass cancellations of tours to Turkey and Azerbaijan after these countries publicly supported Pakistan in its conflict with India. In just 6 days, over 50% of the bookings to these destinations have been cancelled, with Is My Trip reporting 22% cancellations for Turkey and over 30% for Azerbaijan. Now, these cancellations follow a travel advisory issued by the platform on May 9th, urging travelers to avoid non-essential travel to these countries. Other agencies like Exigo, Cox & Kings and Pick Your Trail have also suspended new bookings, and smaller operators are also seeing significant decline in bookings as well as cancellations.
The consequence of this boycott could be severe, as Indian tourists are a key pillar of these nations' tourism sectors. For example, in 2024, 3.3 lakh Indians visited Turkey compared to 1.19 lakh arrivals in 2014. In fact, Turkey's tourism revenue reached an all-time high of $61.1 billion in 2024, and Indians have contributed a significant chunk. According to Traders Association CAIT, Indians have contributed $291.6 million to this tourism revenue. For Azerbaijan, the numbers are even more striking. From just over 4,800 Indian tourists in 2014 to nearly 2.4 lakh Indians visiting the country in 2024, with a spending of roughly $308.6 million. So a full-blown boycott by Indian tourists could bleed these economies. And it's not just tourism. The pushback is widening. The ex-account of Turkish broadcaster TRT World has been withheld in India. Trade with these countries is also being hit. From marble yards in Udaipur to the fruit markets of Pune, traders are saying no to Turkish imports. The Udaipur Marble Processors Association, for example, has called for a total halt on marble imports from Turkey, which currently is India's largest supplier of marble, worth over 2,500 to 3,000 crore rupees annually. Meanwhile, in fruit markets, Turkish apples have been replaced by domestic produce. India shares a strong business relationship with both Turkey and Azerbaijan, with trade ties worth over $12 billion. But now, amidst a national mood of anger, the big question we're asking today, is it time for India to use the might of its tourists and traders? I'm speaking today with Rajiv Chandrasekhar, former Minister of State and presently President of BJP Kerala, Jyoti Mayal, former President, Travel and Tourism Association, and Sanjay Panda, former Indian Ambassador to Turkey. So welcome to all of you, and thank you so much for speaking with us. Mr. Chandrasekhar, I'm going to start by asking you the question that, we're all thinking of. What's amazing about what we've seen right now is that there is no official call to say, don't go to Turkey. This is happening voluntarily. The number we've reported, 50% bookings cancelled in the last 6 days, is happening with people coming out spontaneously to do this. My question is, Should tourists be involved in what is happening geopolitically, and especially with what we've seen in the last few days?
No, look, I certainly believe that the boycott Turkey movement is a real one, and it is a very legitimate expression of by the people of India on what Turkey has done in support of a terrorist state like Pakistan. Look, every rupee spent by an Indian adds value to the economy that he or she is spending it in, and certainly we don't want our hard-earned rupees and hard-earned incomes to be spent in a nation that is a proxy supporter of a country that is clearly aiding, abetting, and encouraging terrorism against India and Indians. The 26 people who were killed, brutally killed in Pahalgam, are not some academic, intellectual debating issue. These are real people whose families have been really harmed and hit. And therefore, any country today, any institution, anybody who today comes out in support, albeit subtle, albeit indirect, of a nation state like Pakistan that is, taking innocent lives, really brutally killing innocent Indians, I think should be boycotted. And that is a legitimate expression of our dislike, of our rejection of this type of partnerships in the world. We want civilized countries who all equally condemn terrorism and any such cruelty and evil against innocent people. So I think this is legitimate. This is very, very legitimate. And in my opinion, it needs to expand and grow. And countries like Turkey that aid and abet Pakistan must be outed.
When you say the movement needs to grow, in what sense? So, because this is a movement of the average Indian saying, I don't want to spend my hard-earned money and fund a nation that is coming back and doing this, supporting the enemy, and not just with statements, with machinery, with drones. Do you think that there should also be a diplomatic stance from our end? Should this extend to business ties?
I speak, on my own behalf, and I certainly will not. I have long ago stopped using Chinese products, and then I speak for myself as an individual. And I say, I think this is not a time for any Indian, any right-thinking Indian, to be engaged with anything remotely connected to Pakistan or Pakistan's ecosystem that aids and supports Pakistan. And Turkey is squarely in the center of that, when they are the ones who are replenishing Pakistan's drone fleet. They are sending ships and aircraft, as is reported in the media, and they are running this proxy battle against India. And frankly, Turkey has had a long record of needling India in international forums and supporting Pakistan. So there is no need, in my opinion. I don't say that we should be hostile towards Turkey, but certainly there is no justification for the hard-earned rupees of Indian families and Indians at large to be spent in Turkey and to help the Turkish economy. Instead, there are so many other countries that are supportive of India. There are so many alternate tourist destinations. There are so many other business countries. There are in Asia, there's Indonesia, there is Thailand, there is Sri Lanka, there is Nepal. There are so many other countries that we can go for both business and pleasure. So I think that is the clarity of thought that Indians are beginning to wake up to. We saw this in the context of Maldives. We are seeing this in the context of Turkey.
Good point on Maldives, because we saw a similar thing playing out, of course, not in this extent. Here it's blatant with what Turkey has done. It's truly, when you see the might of the Indian tourist, and the world can feel it.
Tamana, we are the fourth largest economy in the world. We are a very significant outbound investing nation. We are a very significant inbound investment destination. And so therefore, nobody needs to tell us that we are welcome. I think we know that. I think over the last 10 years, a lot of hard work has gone into making India what it is today. So nobody needs to tell us how great we are, or how big we are, or how important our rupees are. We know that. The issue is not how important our rupees are, or how important our tourists are. The issue is who do we selectively choose to invest our rupees in, to spend our rupees in, and that is the crux of the issue. It's not about whether Turkey's Department of Tourism tries to separate itself from the Turkish Ministry of Defense or the Turkish Foreign Ministry. That is certainly not the issue. The issue is we should, as Indians, spend our money, spend our rupees, invest in, welcome investments from nations that are aligned to our civilizational outlook, aligned to our worldview about having peaceful coexistence, saying no to terrorism, saying no to war. So this is our value system, and therefore it is an absolutely reasonable proposition to put forward that Indians who believe in this should look for partners where the money is spent, money is invested, or we seek investments from and partnerships from countries that believe in the same values.
You know, it's an important concept to understand, because the point being made is that there has to be an economic price for your actions diplomatically and globally as well. Do you think that that economic price should extend to Indian industry? For example, there are some companies in the tourism sector saying they won't provide hotel bookings and flights for Turkey, and quite a few examples of that from smaller industry coming in. Do you think that needs to be extended?
I think industry will participate. I don't think today, I mean, I know for a fact the last 48 hours, the amount of goodwill that messages that I have received from youngsters, youth in Kerala, all across the spectrum, across every community, across every religion, saying that we are behind India, we are behind the Indian leadership, we are behind and supportive of our armed forces, is absolutely inspiring. I can tell you that the feeling that India today must stand up and assert its rights, its right to a peaceful coexistence in a peaceful world, is an absolutely deeply felt feeling. Whether it's business, whether it's a student, whether it's a housewife, this is a feeling that is widespread, and nobody should underestimate this. Certainly not countries like Turkey or Pakistan. This is a very deeply held emotional feeling by Indians that while we work hard, while we build a better future through hard work and not harming anybody, there are forces out there that are determined to harm us for no fault of ours. And that is not something that is just an academic issue for industry organizations to debate or discuss. This is an emotional feeling that every Indian feels, and that will, according to me, while nobody has come out and said this, this will cut across industry, this will cut across investments, this will cut across tourism, this will cut across all types of bilateral and including friendly relationships between people who happen to be friends, Turkish and Indian. I have a few Turkish friends whom I've known for many, many years. And I can certainly tell you that yesterday I messaged one of them and said, this is not on. And so it is an emotional feeling when 26 people are brutally killed. Tamanna, this is not some, outlier sort of an issue. This is a very deeply emotional moment for India.
I think it's also making it clear, are you a friend or an enemy? You can't have it both ways. Thank you so much, Rajiv Chandrasekhar, for speaking with us. Just by the way, the bilateral trade between India and Turkey in 23-24 was about $10.43 billion. Our exports to Turkey are higher. So we have a trade surplus right now of nearly $3 billion in India's favor. So that's to be kept in mind as well. Ambassador Panda, I'm going to come to you first, because this is a tricky terrain. While the national sentiment right now, the outpouring is very clear, and these are again individuals. I mean, these are not numbers that you can cook up, right? You might have a couple of companies coming and saying that we're suspending flights or we don't want to give bookings. But if half the bookings that are there in the system are cancelled in 6 days, this is the average flyer saying, no, I don't want to go to a country that's providing drones to the enemy against my armed forces. Do you think that this is something that can extend further, or this is something that typically would blow over?
Tamanna, I was very carefully listening to Mr. Chandrasekhar. You see, what he was saying was echoing the public sentiment after this barbaric act in Pahalgam. So